All right, guys, welcome back to the Independent Investor channel. This is going to be Investing Made Simple. I'm going to go over 5 things that I really feel like everybody should at least have in their tool bag. They should have an explanation from somebody like myself, quick, down and dirty. This isn't going to be an in-depth video. It's going to be a quick acknowledgement to the 5 benefits that I feel passive investors will experience. And you're going to find at the end of this video, if you have any reservation at all about entering into the stock market, this short video is it should really give you the preparation that you need to at least dig a little bit deeper for yourself and answer the question for yourself of whether or not investing is for you or not. I contend that everybody should at least look at the prospects of investing. And by going over these 5 benefits, I really think you might understand a lot more about how beneficial passive investing can be and how simple it can be, guys. So let's get right into it here. The first thing that I really want to push out there, this is one of the most overlooked aspects of investing, is diversification. Passive investing allows you to enter into certain products that allow you to buy the broad market, okay? And this is so important. It's really one of those historical attributes of an investor. It's so important to seek out diversification. Think about diversification as your defense mechanism. If you own 500 stocks, okay, or a piece of 500 stocks, and you have 30 of those companies fail, you're going to be totally fine, okay? As a diversified investor, you get that benefit of being defensive in nature. Conversely, the single stock investors, if they pick the wrong stock, they're in trouble, okay? And the simple benefit to passive investing through diversification is you buy that diversification up front and you add that defensive layer into your portfolio, and it really helps protect you to the downside when volatility kicks up, all right? Number 2 is it really promotes a buy and hold strategy, which has really been historically proven to be the best way of investing that you could ever pursue. And now a lot of people will shun this off and say, you know what, I want to try to beat the market. I want to try to time the market. I can beat the market. You know, you have a few successful trades under your belt and you think, I've got this licked, I can do it. Historically, that's been proven to be a real fallacy in the stock market. And if you're a new investor and you don't feel comfortable anyway entering into single stock, okay, it allows you to enter into a passive investment and get some time under your belt so you can experience the fluctuation of your money, okay? Because you're going to be curious and you're going to look at it. And through that monitoring process, you're kind of get yourself mentally conditioned to watching your money ebb and flow. It's going to go up and it's going to go down. Now, we have to be very careful not to act upon those short-term movements within the account, okay? So if you're willing to buy into the buy and hold strategy, a passive investor can do just that. You don't have to be worried about selling. You just need to be worrying about funding the account over the long term. Number 3, and this may be the biggest benefit for new investors, is you don't need any experience at all. None. The products that are out nowadays are so cutting edge and so low cost. We'll get to that in a second. But these passive investments are built to give you exposure to the stock market and allow you to hold those and forget them, okay? I always call them like my barometer of the stock market or a gauge of the market. If you're buying the entire S&P 500 through a good ETF product, it's allowing you that opportunity to buy the entire market all at once. And it's such a huge benefit because there's no thought involved in doing that. It's taking you from a non-investor to an investor overnight. And you're buying the S&P 500 if that's in fact the route that you choose to take, right? But no experience necessary to make that decision. None. You don't need any experience at all to start an account. That could take you a matter of hours if you really want to get it done quickly, but you're in no rush. Start the account, fund it, and enter into some of these passive assets. all right? But there's no experience necessary at all to become a simple passive investor. That's absolutely one of the benefits. Number 4 is you can track the market, and this is really overlooked. It's really overlooked from a lot of folks who think that beating the market is what's necessary in stock market investing, when in fact, by matching the market or tracking a broader index like the S&P 500, if you're able to track that benchmark, okay, if you're able to own a product that tracks that, you're not going to be getting your 20% a year, but very few people do that. If you can get that 8 to 10% rate of return that historically the S&P 500 has turned back to you, you can build a winning program on those rates of return. And by tracking the market, you're almost guaranteeing that you're not underperforming the market. I have a big, impressive portfolio, but somebody who just goes out and buys the S&P 500 has just as good a chance at tracking the market as I do with my big, impressive portfolio of underperforming the market. Who's a better investor at that point? All right? Do not underestimate the power of tracking the market. And a passive, beginning, simple investor can do just that by entering into these products that we talk about all the time on the channel. And the 5th and final benefit that I want to roll out to you guys really quick is you get to exploit all of the benefits of becoming a self-directed investor. The products of index fund investing and ETF investing didn't exist when I started. Furthermore, some of the cutting edge accounts that are out there allow you to start the self-directed Roth IRA account. All right, the 2 affiliate programs that the Independent Investor Channel have both offer Roth IRAs of a self-directed nature. What does that mean? It means that you're in charge. I just spent 5 minutes talking about how you don't need any experience and you don't really need a lot of wherewithal to start these accounts. But if you do end up opting for any one of these 2 accounts or any of the other fine brokers out there, you're really going to set your potential free within these accounts by allowing your dollar cost average program to be set up and initiated. You're going to allow your dividend reinvestment program to be enacted. You're going to allow your strategic buying within that account so you can monitor it, and when the market's down, you can go ahead and fund that account free of charge. That's your dollar cost average benefit. And you're going to finally allow those products that we talk about within the self-directed account to grow into the future unrestricted. What that means is there's not going to be any fees within the account that take away or detract from your hard-earned profit within that account, guys. You're the one taking the risk. You're the one who should reap all the rewards. Guys, thank you so much for tuning in to this 5 strategic benefits of simple investing as a passive investor. It is so important for beginning investors to get this message in their hand. Subscribe to the channel, help us support, leave your comments at the end of the thread here. Leave your comments for me, I'll get back to you, and share the message out there with any of the beginning investors that you know could benefit from the material. Guys, thank you so much for tuning in, and good luck in your investment future.